Welcome to This Explainer. Right now, there's a truly fascinating and honestly kind of urgent situation developing in the global markets. Today, we are breaking down exactly why legendary billionaire investor Jim Rogers is sounding the alarm on what he sees as a massive market bubble. And more importantly, we're going to look at his specific survival strategy. We're talking about a very deliberate, heavy shift into a gold and cash mix. So if you want to understand how one of history's absolute greatest investors protects his wealth when everyone else is out there partying, well, you are definitely in the right place. 4,000%. Just let that number sink in for a second. That represents the historic, just totally market-crushing returns Rogers achieved as the co-founder of the Quantum Fund alongside George Soros. Look, when a guy who beat the S&P 500 by over 4,000% starts taking drastic action, you pay attention, right? He didn't hit those numbers by just following the herd. He got there by spotting the crashes and the booms way before the mainstream ever caught on. All right, Section 1, the billionaire's warning. Let's dive right into the core conflict happening in today's markets and see exactly what Rogers is doing differently from the rest of the pack. So Rogers recently made huge waves with a massive, literally unprecedented liquidation. He came out and said, I have basically sold most countries in the world. He is literally dumping almost all of his global stock positions. I mean, think about how wild that sounds right now. The broader stock market is sitting near all-time highs, financial news is flashing green everywhere, yet here's one of the most successful investors alive, packing up his bags and sprinting for the exits. Which brings us to Section 2, the euphoria problem. You see, this mass liquidation isn't random. It's driven entirely by his read on current market psychology. There is this incredibly stark contrast happening right under our noses. On one hand, you've got everyday retail investors caught up in this massive wave of FOMO. They are going completely all in on US index funds and AI tech stocks, just desperately chasing the rally. But on the exact opposite side, Jim Rogers is pulling his capital out of the frenzy and moving heavily into defensive assets. It's the classic setup, isn't it? The crowd rushes in while the seasoned veteran quietly slips out the back door. Rogers makes a great point here. When everyone is popping champagne at the absolute peak, history practically screams that it's time to ask the hard questions. Extreme market euphoria. Yeah, that is the classic precursor to a severe contraction. Bubbles don't pop when the market is fearful. They pop when the consensus absolutely believes the good times are going to roll forever. So instead of blindly chasing this AI and tech rally, Rogers is looking at the hard macro data and preparing for the fallout. Okay, moving on to Section 3, the gold and cash mix. Because the obvious question is, if he's leaving the stock market behind, where on earth is his capital actually sitting? Let's break down the exact strategy. He has meticulously built what is basically a financial fortress. The vast majority of his wealth is currently parked in a very specific gold and cash mix. We're talking about a massive allocation to US dollar cash and treasury bills, a really large slice dedicated purely to physical gold and silver, and just these microscopic little allocations for select international equities. Guys, this setup is not built for aggressive growth. No way. This is a bunker built to withstand a financial hurricane. Let's start with the US dollars. Now, I know what you're thinking. Doesn't cash just lose value to inflation? Well, yes, but Rogers is holding heavy US dollar cash not as a forever investment, but as a temporary safe haven. It's his dry powder. When global panics hit and markets inevitably crash, international capital always flocks to the greenback for liquidity. By holding all this cash, he's positioning himself perfectly to just swoop in and scoop up assets at massive discounts when the contraction forces everyone else to panic sell. But, cash alone just isn't enough, which is exactly why the second half of his strategy is absolutely vital. Pairing that cash with physical gold and silver creates a permanent inflation hedge. So while his dollars give him the liquidity to act during a crash, his precious metals are there to protect his purchasing power against long-term currency devaluation. And what's really fascinating here is that he's holding these hard assets long-term, just waiting patiently for a dip to accumulate even more. This whole gold and cash mix, it acts as the ultimate barbell strategy for capital preservation. And just to completely round out the portfolio, he does keep a tiny sliver of his wealth in stocks. But actually, hold on, it's definitely not the high-flying US tech stocks you'd normally expect. He's looking at super niche emerging markets, specifically equities in places like China and Uzbekistan. Why? Well, simply because the valuations down there are just extremely low right now. These are markets currently experiencing widespread despair. There's zero euphoria here, only pessimism. And for a guy like Rogers, that means the downside risk is incredibly limited compared to those wildly inflated markets in the West. All right, Section 4, True Contrarian Investing. Let's peel back the layers on the psychology behind his strategy and talk about what it actually means to be a contrarian in today's crazy climate. Because being a true contrarian isn't just about being a rebel or blindly betting against the crowd just for the sake of being different. Not at all. It is a highly disciplined approach that means actively avoiding broad market FOMO to intentionally seek out asset classes characterized by despair and pessimism. That is where the true financial opportunity hides. You sell into the euphoria, and you hold onto that defensive gold and cash mix until the despair inevitably arrives. Which leads us to our final section, Section 5, Your Best Defense. So what is the single biggest actionable takeaway for everyday investors who just want to survive this totally uncertain macro environment? Rogers offers this paradoxically powerful golden rule, and I love this. He says, don't listen to other people, including me. He is literally urging you to stop chasing random stock tips, tune out the constant media hype, and just stop blindly following gurus, yes, even billionaire contrarians like himself. Because if you don't do your own homework, you are always going to be at the mercy of the crowd. Ultimately, your absolute best defense is strict risk management. You've got to stick strictly to what you understand inside out. Never, ever buy an asset just because someone else told you it was a sure thing. And honestly, perhaps most importantly right now, holding cash is a perfectly legitimate defense. If you're looking at the markets and you just don't understand the crazy valuations, sitting on the sidelines in cash or hard assets, that's a highly strategic move. It is definitely not a weakness. Which brings us to the ultimate question for this explainer. After seeing exactly how a billionaire structures his defensive gold and cash mix to weather the storm, I'm gonna leave you with this. Are you holding cash right now, or are you still riding that tech rally? Really think carefully about where your capital is sitting today. Thank you so much for joining me, and as always, keep questioning the consensus.